Good morning, everyone. Let's see, I gotta get rid of this Streamlabs thing. Good morning. It is now, what is it, December 5th, right? Tuesday, December 5th. Hope everyone's doing well. We got a few things to talk about here today as the market has been pulling back slightly here. We're back into the distributions lower as we talked about yesterday, and we were looking for that press to hold out that high 70. 80 area on the S&P, and we have the bottom end of the distribution here that got a lot of short stuck. We'll talk about the S&P and NASDAQ in just a bit, but generally speaking, we've seen a lot of the offers being hit into the NASDAQ and the tech market, right? Some of the money is flowing out of tech right now and into small caps. As we kind of expected, the sideways rotation slash downside in tech after seeing such aggressive rallying throughout the year starting to finally hit, and small caps, meme names, whatever you want to call them, they've been getting a nice influx of money. Those names that have been getting beat up over the last year. IWM caught a bid yesterday on the backside of downside pressure in the S&P 500 and the NASDAQ as well. So if we take a look at IWM here quickly, before we run into some of the news that has been going on, you can see that we're still sustaining a pretty good upside momentum in IWM. Yesterday, where was it yesterday? Yesterday over here off the start, we held out that 184 level on IWM and ran up towards that 187, major top of resistance, but money's still flowing into the small caps, as we can see, and away from tech, triple Qs, NASDAQ getting pulled down along with a tech-heavy S&P. Realistically, a lot of the S&P is in those big tech names. So I'll talk about how that affects what we're looking at today and how we can take a look at that in general. Based on levels, trades, opportunities, so on and so forth. Just want to make sure that we're all good here. Let me know if you can hear. If you can't hear, obviously, please let me know too. But generally speaking, we'll talk about some of the funding for the foreign policy priorities that remain stuck on Capitol Hill as dire warnings abound over what it means for national security. So back in October, President Biden had requested $106 billion in supplemental funding, including $61.4 billion for Ukraine, $14.3 billion for Israel, and $7.4 billion for Taiwan and the Indo-Pacific. So an additional $13.6 billion for the U.S.-Mexico border, urging Congress to pass the measure as a comprehensive bipartisan agreement. However, the tensions continued to brew over the aid in Kiev and immigration and asylum procedures, as well as priorities that should be tied into what bills and things get over the finish line. So I want to be clear, without congressional action by the end of the year, we will run out of resources to procure more weapons and equipment for Ukraine and to provide equipment for U.S. military stocks. This is what White House Budget Director Young wrote in a letter to congressional leaders. There is no magical pot of funding available to meet this moment. We are out of money and nearly out of time. If Ukraine's economy collapses, they will not be able to keep fighting full stop. Putin understands this as well, which is why Russia has made destroying Ukraine's economy central to its strategy, which you can see in its attacks against Ukraine's grain exports and energy infrastructure. This is what was in said letter. So the U.S. government also came close to a shutdown at the end of September, which some last-minute deal making that kicked the fight into the new year and left out some key foreign aid initiatives. Young also further said that the new round of national security funding and contracts would bring benefit to the U.S. economy. For example, air defense systems built in Alabama, Texas, and Georgia, and vital subcomponents sourced from nearly all 50 states. So, on the other hand, a failure to pass the measure would kneecap Ukraine on the battlefield, not only putting at risk the gains Ukraine has made, but also increasing the likelihood of the Russian military victory. Now, we've seen I wouldn't necessarily call this the impact on the recent movement in the stock market, but it's something that has been called upon right recently. It hasn't necessarily been impacting what these moves are, and we're going to talk about what these moves are in just a bit. We also have some news out of AI chips, NVIDIA mainly, right? We talk about export controls. The U.S. may soon add more curbs on the tech exports to China. Technology changes, China changes, and we have to keep it up. This is what Commerce Secretary Gina Raimondo declared, calling the restrictions on sale of advanced semiconductors and related gear a bold move and necessary because these semiconductors are unbelievably powerful. Nvidia had even previously delayed its launch of a new AI chip it designed to comply with US export curbs and heavy discussion development in the sector. So we've seen that these chips have been pulling back a decent bit along with tech, and these things could strain the upside momentum in chips. If we take a look at Nvidia here, Nvidia over the last few sessions has topped out realistically. We take a look at, like, let's say a 30-minute chart here. We've topped out pretty aggressively around that 500 level, and we've seen continuous downside legs. Now, there's a very important area here that's going to play a significant role. It's significantly further. It's down at that 405, 406 area that they do have to sustain. But a lot of analysts have expectation that chips are going to have a rougher start to 2024, as we'll see tech kind of money start flowing out of tech, which it already has, and start flowing into things that have been deemed undervalued realistically. So as we further look at this, right, in terms of AI, there's other names that we have to take a look at, like Meta and IBM. There has been a debate over open versus closed artificial intelligence development rages for Meta and IBM. Have launched a coalition of over 50 AI firms and research institutions advocating for an open source model. So the group's stance differs from the closed approach which Google has, right, their rivals, and ChatGPT maker OpenAI, backed by Microsoft, amid growing safety concerns over AI's power. So many members of the new alliance include AMD, Intel, CERN, Fast.ai, and more. So we believe that it's better when AI is developed openly. More people can access the benefits and work on it safely, said Nick Clegg, who is the president of global affairs at Meta. We've seen that some of these tech names have pulled back somewhat significantly here. Like, you'll take a look at Goog, which has been pulling back drastic. Well, not drastically, but a decent bit. The only thing is that Apple over here, that was weird, pre-market 130. But Apple is one of those names that is still sustaining this balance. I think that Apple is one of the stronger names as well, but I am looking for some kind of late action to the downside, and Apple is getting overbought with a lot of these other names that we have. In terms of today, we have some news that comes out of PMI composite final at 945, ISM service index at 10, job openings and labor turnover at 10, and Fed's Gibson is talking about fostering financial innovation. So as I look at this, we take a look at the S&P 500 and NASDAQ as well. You're starting to see that we've accepted into distribution blocks lower. Obviously, if you look at it on a daily, it doesn't look that drastic, but it does look a little top heavy. Now, you look at this, for example, on a 15-minute chart here. We zoom in on it, right? What we can see is there's a very classic distribution, right, that shapes up between the 80-ish, right, high 70s, and then into these mid to low 50s, with some kind of support into that mid 40 as well. What we've seen yesterday was the acceptance after a very strong bid and strong day on Friday, and that pushing aside all of these bids is pretty drastic, right? It's a drastic move for these sellers, and what they have to do is continue that momentum push, which pretty much includes the break of the downside distribution bands. So I'm still looking for some kind of sell to come out, some kind of aggressive selling to open up over the next day or two. Otherwise, if we keep holding the bottom band of the distribution, these sellers are going to get pushed aside, they get trapped, and the upside opens up. So as it stands, mid to high 70s still is an area that I'm looking at to continue this short side momentum. We have a lot of sellers stuck into that low 40 on the S&P, and we'll see if they can give way. NASDAQ, on the other hand, a lot weaker with the tech market in general, getting some downside press. First time in a while that we've seen the NASDAQ weaker than the S&P. And generally what I'm looking at is, as long as we can hold that 880 area, 880 to 890, I think that these sellers can come in. Even before that, if they do some damage at like 850-ish, that would be good to create a lower high and potentially run back into these lows. The only thing that is kind of weird to me is that overnight we didn't manage to make a new low or come back into those overnight lows on the last move from NASDAQ. So we'll see how these guys shape up and if this downside pressure comes, but I have a slight lean to the downside based on those resistance levels that I've been talking about. So with that being said, right, I want to wish you guys a great Tuesday, right? We'll open up our live trading room. Let's not do anything crazy. Just because I have a slight lean to the downside doesn't mean just short every single rally. We have to understand how this thing's shaping up because they are losing time, right? They need to get more active on the short side and start breaking bottom bands of distributions for that downside to accept. So let's keep that in mind. Let's open up our live trading room, and I'll see you guys tomorrow to conclude, and the rest of the week to conclude the week, to see how our updates do. So thank you, everyone. Check out community.tradeproacademy.com, and